Hey everyone, and welcome back to the channel. Have you ever scrolled through social media and seen those flashy ads promising to turn your spare change into a fortune overnight? Invest $100, retire early. They make it sound so simple, right? But is there any truth to these claims? Can you really go from ramen noodles to lobster dinners with just a Benjamin in your pocket? Well, the answer, like most things in life, is a little more nuanced. Turning $100 into $1,000 quickly is definitely a long shot. However, with the right approach and a sprinkle of patience, you can absolutely grow that $100 into something much more substantial. Let's ditch the get-rich-quick schemes and dive into some realistic strategies to jumpstart your investment journey. First things first, building a foundation. Before we jump into the nitty-gritty of where to put your hard-earned $100, let's talk about setting yourself up for success. Investing is a marathon, not a sprint. So, the first step is understanding your risk tolerance. Are you comfortable with the possibility of losing some money in exchange for potentially higher returns? Or are you more of a play-it-safe kind of investor? Knowing your risk appetite will help you choose the right investment vehicles. Saving versus investing, understanding the difference. Now, there might be some confusion here. Is saving the same as investing? Not quite. Saving is about setting aside money for short-term goals, a new phone, a vacation, that emergency car repair. You typically park your savings in a safe place like a bank account, where it earns a little bit of interest. Investing, on the other hand, is about growing your money over the long term. Here, you're putting your money to work, hoping it will generate a higher return than a simple savings account. The power of compound interest, your secret weapon. Alright, let's talk about compound interest, often referred to as the eighth wonder of the world by Albert Einstein himself. Think of it as interest on your interest. The longer your money is invested, the more interest it accumulates, and then that interest itself starts to earn interest. It's like a snowball rolling downhill, growing bigger and bigger over time. So, even with a small amount of money like $100, compound interest can work its magic if you give it enough time. Investing strategies for the $100 investor. Now that we've laid the groundwork, let's explore some concrete ways to put your $100 to work. 1. High-yield savings accounts. Okay. So this isn't quite investing in the traditional sense, but it's a great starting point, especially for risk-averse beginners. High-yield savings accounts offer a higher interest rate than your average savings account. While the returns might not be earth-shattering, it's a safe way to earn a little bit extra on your $100. 2. Micro-investing apps. These apps are like the Robin Hood of investing. They allow you to invest tiny fractions of your money in stocks and ETFs, exchange-traded funds. Some micro-investing apps even let you invest your spare change from everyday purchases. With just $100, you can start building a diversified portfolio and get your feet wet in the stock market. 3. Fractional shares. This is another cool innovation that lets you invest in expensive stocks like Amazon or Tesla, even if you can't afford a whole share. With fractional shares, you can buy a tiny slice of a company for a fraction of the price. 4. Peer-to-peer lending. Ever considered becoming a mini banker? Peer-to-peer lending platforms connect you with individuals or businesses who need to borrow money. You can choose who you lend to based on their creditworthiness and earn interest on your loans. Remember, there's no free lunch. While these strategies offer a chance to grow your $100, it's important to remember that all investments carry some degree of risk. The stock market can be volatile, and there's always the possibility of losing money. So, never invest more than you can afford to lose, and do your research before putting your money into anything. The importance of time and consistency. The key to success with any of these strategies is time and consistency. Don't expect to turn your $100 into $1.